having to deliver some tough news, I'm sure, to your employee base. Is this as bad as it gets?
Carolyn, good to see you. Thanks for having me on today. Always tough when you have to make a cost reduction like this. But I think long term, we have to look through what could be an uneven recovery here and a gradual recovery here and make sure that we maintain competitiveness as we move through. We saw operating rates in some of our businesses, especially the ones impacted heavily by automotive and construction markets, dip as low as 50% in the second quarter. But we saw others, like in our packaging area and in industrial solutions and health and hygiene and home and personal care areas, stay relatively strong. So we have to make some adjustments to make sure that we can be competitive for the long term.
I was fortunate enough to speak to you about 3 weeks ago, and we talked about how you see across oil, automotive, personal care, beauty. Are you getting any more transparency on where this goes for those sorts of sectors? Are you still feeling that there's an improving situation for them or not at the moment?
I do. We saw some very positive things in the quarter. For example, we saw plastics business was very steady year over year. Packaging was actually up 6% year over year. So that's strong. And obviously food and specialty packaging, health and hygiene markets drove a lot of that growth. We've seen China come back. China was up double digits year over year versus last quarter. China was up 31% in volume. So that's a pretty strong rebound in China. In North America and Latin America, which is just now beginning to see the brunt of the COVID pandemic, in North America, we actually saw volumes improve across almost every segment in June and into July. And remember, most of the North American economy, like the auto industry, did not start up until about the 18th of May. So you didn't have much of a month of May. You had a strong June, and the order book in July looks very good, orders and shipments both. And we're seeing, obviously, the improvement in oil prices helps us, and so that's helped us gain a little bit of pricing momentum in plastics, which we think we're going to see again in the month of July.
So are you getting more optimistic about the U.S. recovery? I know that you've said that it's going to be uneven, but do you feel that July bodes well, considering we're seeing these job claims, for example, which aren't painting a pretty picture?
I am more optimistic about demand in some areas. We have to keep our eyes open to trends that are emerging. So, for example, June housing starts were strongest that we've seen in a long time. And I think yesterday you saw a report from Whirlpool on appliance sales. Housing starts and appliance sales typically go together, but also people are nesting. People are at home and they're spending time at home and they're replacing dishwashers and refrigerators. So that's good. Appliance sales are going to pull some demand. Auto sales are up. A lot of auto sales are probably coming off of dealers' lots today. But the net effect of that is that production will have to come on. And when production comes, that's a pull on the petrochemical industry. The thing we have to keep an eye on is construction. Construction, if you have an existing project, people are going back and finishing those projects. But new projects aren't being permitted yet. And so construction and capital spending in the industrial side is one we've got to keep an eye on. And we probably don't have good visibility to that yet.
You're also keeping a keen eye on liquidity, Jim, and I know that a lot of the steps that you've taken, particularly the job cuts, the streamlining, the asset sales, are all going to be focused on really trying to be proactive in that effect. Are you worried about your liquidity conditions if we see this crisis go on into 2021?
We have strong cash flow and strong liquidity right now. That's one of the things I'm proudest of the team in the quarter. We have $12 billion in cash and committed liquidity. We ended the quarter with $3.7 billion in cash. We were also able to pay down $600 million in debt in the quarter. So far this year, we paid down $740 million in debt. So cash and liquidity was a key focus for us going into the quarter. We knew that, and we focused on that consciously because the market demand just wasn't there. With so many industries and economies locked down, there was no reason for us to run hard operating rates and put material into inventory. We needed to focus on cash. And our top three priorities are to safely and reliably run the operations, make sure we support our dividend, and make sure that we're being able to pay down debt.
Talk to us about that first point, safely. How are you seeing the US at the moment handling the COVID crisis? We spoke before about how much I've seen it, you've pinned it on your Twitter account, that wear a mask right now. Do you feel the US is handling this in the appropriate manner?
I think things are improving. I think people are beginning to take seriously the fact that even when you reopen an economy, the virus is still there. And the thing about COVID-19 is that it's so easily transmissible. And so I think people are starting to pay attention, and you're seeing more mask mandates and people practicing the right behaviors. That's going to be necessary for the rest of this year and on into next year, and until we've got a better angle toward it. The positive thing is the number of deaths seems to be coming down, and people are surviving it. So if you look at our own situation, we've been able to operate. We've had people coming in, and we've had some cases, but typically people have been able to go home for a couple of weeks, quarantine, and come back to work. What you want to avoid is a severe case. You want to have the ability to get somebody in and get treatment so that they don't have any long-lasting health effects. And that's what we have to be careful about. And that's why everybody has to play a part.